Okay, so you know how we always ask you to send in stuff that's caught your eye?
Yeah, those articles, those market trends, anything that's making you go, what's that all about?
Exactly. Well, you guys definitely delivered this time around because we got a ton of messages about this article from the Motley Fool. It's called Why I Capitalized on the Nasdaq Slump to Buy More of This Top ETF.
Get you right.
Definitely grabs your attention. And I can see why so many people were intrigued. This isn't just some random stock pick. It dives into a whole strategy for navigating those market dips, especially when it comes to tech.
Yeah, and we're going to break it all down for you today, figure out exactly what the author's talking about and why they think this particular ETF is worth a closer look, especially after the Nasdaq took that tumble.
Sounds like a plan. We're all about uncovering those hidden gems, those strategies that might not be on everyone's radar.
Okay, so the ETF in question, just to get it out there, is the JPMorgan Nasdaq Equity Premium Income ETF. Ticker symbol JEPQ for anyone who wants to punch it into their trading platform right now. Makes sense to have that up front. And this article, it really kicks off with the author getting kind of personal.
Yeah. They talk about how they used to totally dread those market downturns. Like,
Yeah.
who doesn't, right?
Mm-hmm.
Seeing your portfolio in the red, it can feel like, such a punch in the gut.
Totally. But then they go on to describe this kind of like, I don't know, almost a mental flip.
Right. Like a total 180.
Yeah.
Instead of freaking out when the market takes a hit, they now see it as, like, a buying opportunity.
Exactly. It's like instead of thinking, oh no, I'm losing money, they're thinking, okay, things are on sale, time to load up on those quality companies I've had my eye on.
It's a pretty powerful shift in perspective, right? And it seems like this specific opportunity came about because of that recent NASDAQ slump.
Mm-hmm.
The article mentions it was down, what, over 10%?
Yeah, the drop like that definitely gets your attention. I mean, the Nasdaq's not exactly known for being like the most stable index out there, but 10% is a significant move.
Definitely enough to make some folks hit the panic button. But this author, they saw it as the perfect time to snag more shares of JEPQ.
All right, so let's talk JEPQ. For those listening who might be thinking, okay, what is this thing? Can you give us the elevator pitch?
Sure. So, in a nutshell, the JPMorgan Nasdaq Equity Premium Income ETF aims to give investors a regular monthly income stream, like literally a check hitting your account each month. And it does this while still giving you exposure to those potentially high-growth companies in the Nasdaq 100.
Right, so it's kind of trying to thread the needle between growth potential and like dependable income.
Yeah, like having your cake and eating it too.
Yeah.
But here's the kicker. It's not just passively tracking the Nasdaq 100. The article digs into this two-pronged strategy that JEPQ uses, and that's where things get really interesting.
Okay, I'm all ears. Lay it on me.
The first prong is what they call the underlying equity portfolio. So it's basically a basket of stocks, mostly from the Nasdaq 100. But here's the thing. It's not just a mirror image of the index. The fund managers actually use a combo of, like, data science and fundamental analysis to handpick the stocks.
So it's like they're cherry picking the companies they think have the best chance of outperforming, even within the Nasdaq 100.
Exactly. They're not just riding the index wave, they're trying to, like, surf ahead of it. Now, the second prong of the strategy, the disciplined options overlay, this is where that juicy monthly income comes in. And it can be a little tricky to wrap your head around.
Yeah, options can seem a bit intimidating, but I think I can break it down in a way that makes sense. Think of it like this. The fund is essentially selling insurance on the Nasdaq. They're giving someone else the option to buy the Nasdaq at a higher price in the future.
Okay, so like they're saying, hey, you can buy this thing from us at this price, but only if you want to.
Right, and they get paid a fee up front for making that promise. That's the premium. It's like selling an insurance policy. And that premium is what funds that monthly payout to JEPQ investors.
Got it. So they're basically getting paid for the possibility that the Nasdaq will go up. And if it doesn't hit that higher price, they keep the premium, and that money goes right to the investors.
Precisely. And as the article points out, that can add up to some pretty significant income. They mentioned a 10.1% yield over the past year.
Yeah, that caught my eye too. When you compare that to like what you'd get from bonds these days or even a lot of dividend stocks, it's a pretty attractive number.
No doubt. Especially for investors who are looking for that regular cash flow, that can really make a difference.
For sure. But of course, income isn't the whole story, right? Most of us are looking at total return, how much our investment grows over time. And the article mentions that JEPQ had a total return of 16.4% over the past year.
Which, if I remember correctly, was just a smidge behind the Nasdaq 100's 16.6% return during that same period.
Yep. So what do you make of that? Is it like giving up some growth for that steady income?
It's a good question. I think what it suggests is that JEPQ is striking a balance. It's not necessarily going to be the top performer in a raging bull market, but it's holding its own while also churning out that attractive income stream. Remember, it's aiming to deliver some of that Nasdaq growth potential, but with a bit less volatility thanks to those options premiums.
Right. So it's not all about chasing the highest possible returns. It's about finding an approach that aligns with your goals and risk tolerance.
Exactly. And speaking of risk, let's circle back to that Nasdaq slump and why the author was so keen to buy more JEPQ when everyone else was like running for the hills.
Yeah, they make a really interesting point about volatility, right? How it actually plays into JPQ's hands.
Absolutely. Remember how we talked about those options premiums, those fees they get for selling insurance on the Nasdaq? Well, the higher the volatility, the more the market's jumping around, the more those premiums go up. It's basic supply and demand. When there's more uncertainty, that insurance becomes more valuable, and JEPQ, as the seller, gets to charge more for it.
So basically, the more the market freaks out, the more money JEPQ can potentially make from those options.
It's kind of counterintuitive, but that's how it works.
Okay.
The article even mentions some data showing that historically, JEPQ has seen higher cash distributions during and after those periods of higher volatility.
Wow, so those market dips that make everyone else sweat, they could actually be boosting JEPQ's income generation.
Yeah.
I mean, there's risk everywhere you look, but that's a pretty cool dynamic.
It is. And on top of that, the article highlights how JEPQ actually held up a little bit better than the Nasdaq during that recent slump. The Nasdaq dropped 12.6%, but JEPQ only went down 11.5%. It's not a huge difference, but it's something.
Yeah, I noticed that too. It suggests that maybe those options premiums, that steady income stream, it's acting as a bit of a cushion when things get rough.
Exactly. It might not completely erase the losses, but it could potentially soften the blow. And again, this is where that active stock selection within the Nasdaq 100 could also be playing a role.
Right. They're not just blindly following the index. They're picking and choosing the companies they think are best positioned to weather the storm.
Now, taking all of this into account, it seems like the author sees a double win in buying more JEPQ during that Nasdaq dip.
Okay, I'm following. So first, they get that boost to income from the higher options premiums that come with all that volatility.
Right. And then, as the market starts to recover, and they clearly believe it will, the value of those underlying tech stocks in JEPQ should also rise, giving them potential capital gains on top of that juicy income.
So it's like a 2-for-1 deal. Get paid while you wait for the market to rebound.
That's the idea, anyway. And the author seems pretty confident that this strategy will pay off. They even mention in the article that they personally own shares of JEPQ.
Yeah, that always adds a layer of like, okay, they're putting their money where their mouth is. It's not just some theoretical idea. It's something they believe in enough to invest in themselves.
Transparency is always a good thing.
Totally. So to wrap this all up for you, our amazing listeners, our deep dive into this Motley Fool article has really highlighted this interesting strategy for potentially making the most of those Nasdaq downturns. It involves using an ETF like JEPQ, which aims to provide that consistent monthly income through selling options while still giving you exposure to the growth potential of those Nasdaq 100 companies. Yeah. The key takeaway here is that the author believes in buying more of JEPQ when volatility is high. It's a bit counterintuitive, but the logic is that the higher volatility actually boosts the income JEPQ can generate, and as the market recovers, those underlying stock holdings should appreciate as well.
That's a fantastic summary, and I think this article raises a really crucial question for anyone listening who's thinking about their own investment approach. How do you balance the desire for growth with the need for income, especially during periods of market uncertainty? Could an ETF like JEPQ have a role to play in your portfolio, providing a bit of both worlds? I think it's absolutely worth exploring.
I totally agree. And if this deep dive has sparked your curiosity, it's a great reminder to dig a little deeper into the world of ETFs, understand how option strategies work, and keep a close eye on what's happening in the Nasdaq 100.
There's always something new to learn in the market, and it sounds like our listeners are already on the right track. Keep those questions coming, folks. We love getting your insights, and we'll keep bringing you the deep dives you need to navigate this crazy world of investing.
And who knows, maybe your question will be the one we tackle next time. Until then, happy investing, everyone.